Welcome to the Explainer. Listen, if you're a senior or even just thinking about retirement, your taxes could be in for a big change over the next few years. There's a brand new tax bonus out there. We're talking up to $6,000. And today, we're going to break down exactly who gets it, how it really works, and what it could mean for your wallet. Let's dive right in. So, this is the magic number at the center of everything today, $6,000. This is the big headline figure from a new law that's aimed squarely at seniors. And trust me, this isn't some small little tweak to the tax code. For millions of Americans, getting your head around this new deduction is going to be absolutely critical for your financial planning.
So what's the deal with this new tax break? Well, first off, you need to know that it's not permanent and it has some very specific rules about who can claim it. It's designed to give you some relief, but you really have to navigate the details to make sure you get the full benefit. And that's exactly what we're going to do. Break down all those details step by step. All right, here's our game plan. First, we'll cover the basics of this new bonus. Then, we're going to tackle the most important question of all: do you actually qualify? After that, we'll see how this thing stacks on top of other deductions you might already be getting, we'll look at the real-world impact on your tax bill, and finally, we'll talk about why this is a limited, four-year opportunity that you'll definitely want to plan for. Okay, first things first. What is this new senior bonus? Well, it comes from a sweeping new tax law that was enacted on July 4th, 2025. And inside that law is a temporary but very significant new deduction created specifically for taxpayers who are age 65 and older.
Now, this is a super important point, so let's get it straight right away. This is a deduction, not a credit. What's the difference? Well, a credit is like cashback. It directly reduces your tax bill dollar for dollar. A deduction, on the other hand, lowers the amount of your income that's subject to tax in the first place. So this $6,000 bonus doesn't mean you get $6,000 back. It means you get to subtract $6,000 from your income before you calculate your tax. For someone in, say, the 22% tax bracket, that translates to about $1,320 in real tax savings.
Okay, now for the part everyone's waiting for. Can you actually claim this bonus? This is where the fine print really starts to matter, and you've basically got three key hurdles you need to clear.
So, the three big tests are your age, your income, and how you file your taxes. The age part is pretty straightforward. You have to be 65 by the very last day of the tax year. Here's a little IRS quirk for you. They consider you to be 65 on the day before your 65th birthday. So for the 2025 tax year, if you were born on or before January 1st, 1961, you're in. Now let's get into income and filing status, because that's where it gets a little more detailed.
Right, so this deduction is specifically targeted, which means it's based on your income. If you want to get the full $6,000 bonus, your income has to fall below these specific lines. For single filers or heads of household, that number is $75,000. And for those who are married and filing jointly, it's double that at $150,000. And get this, if you're married and both of you are over 65, you can each get the bonus for a total of $12,000.
Now, you're going to see this acronym, MAGI, a lot in the official rules. Don't let the jargon throw you off. It just stands for Modified Adjusted Gross Income. Think of it as the special ruler the IRS uses for tests like this. It starts with your regular adjusted gross income, or AGI, and then just adds back a few specific deductions, like student loan interest. Honestly, for most retirees, your MAGI is going to be pretty much identical to your AGI. So what happens if your income is a little bit higher than those first limits we talked about? Well, the good news is you might not be completely out of luck. The bonus has what's called a phase-out. It means the deduction amount gradually gets smaller the more you earn above those $75,000 and $150,000 marks. It eventually disappears completely once a single filer's income hits $175,000 or a joint filer's income hits $250,000.
And that brings us to the last major rule, your filing status. This one's a biggie. You can claim the bonus if you file as single, head of household, or married filing jointly. But, and this is a huge but, if you are married and use the married filing separately status, you are completely ineligible. No bonus. That's a pretty common rule the IRS uses to keep couples from trying to game the system on certain tax breaks.
All right, let's talk about where this new bonus fits into the bigger picture, with all the other tax breaks out there. And this is some of the best news about this new law. The $6,000 bonus doesn't replace anything. It's designed to stack right on top of the deductions you already get.
This is probably the most powerful feature of this entire new bonus. See, for years now, seniors have been able to get an additional standard deduction just for being over 65, but you only got it if you took the standard deduction. This new $6,000 bonus is a total game changer. It's available to you even if you itemize your deductions, for things like high medical bills, big charitable donations, or state and local taxes. It's for everybody.
So just look at how this all stacks up. Let's imagine a single person, age 67, who takes the standard deduction in 2025. They start with the regular standard deduction, which is $15,750. Then they add the existing extra amount for being over 65. That's another $2,000. And then you tack on the new $6,000 senior bonus. All in, their total potential deduction is a massive $23,750. That's a huge amount of income to shield from taxes.
Okay, so we've established you can lower your taxable income by a whole lot. But what does that actually mean for you, for your wallet? How does a deduction like this translate into real dollars and cents back in your pocket? Let's run the numbers and see.
Let's go back to that single senior who's making $70,000 a year. Before this new bonus, after taking their standard and existing age deductions, their taxable income would be $52,250. But now, after applying the new $6,000 bonus, look at that drop. Their taxable income plummets to just $46,250. A drop like that can easily mean hundreds, if not thousands of dollars in tax savings. All right, let's tackle the #1 question people ask about this new law. You see, during the debates, it was sometimes called the no tax on Social Security bill. So, does it actually get rid of the tax on your Social Security benefits? Well, the direct answer is no. But, and this is important, there's a really significant indirect effect.
This quote from Kiplinger just nails it. The law doesn't actually touch the formula for how Social Security benefits are taxed. That's still the same. But since the taxability of your benefits is based on your overall income, by lowering that income by a full $6,000, this deduction can dramatically reduce the portion of your Social Security that even gets counted as taxable income in the first place. For a lot of middle-income seniors, this could effectively make their benefits tax-free.
And finally, let's talk about timing. Because as powerful as this new deduction is, it's really important to understand that it comes with a very clear, very definite expiration date.
You heard that right. This is not a permanent change to the tax code. This deduction is only on the books for 4 tax years. It kicks in for the 2025 tax year. That's the return you'll file in early 2026, and it runs through the 2028 tax year. After that, poof, it's gone, unless Congress decides to extend it. This creates a very specific 4-year window for strategic financial planning.
So what's the big takeaway here? This new senior bonus is a major but temporary financial boost. And that brings up a really critical question you should be asking yourself and maybe your financial advisor. How can you make the most of this? Should you maybe do a Roth conversion while your taxable income is artificially low? Is now the time to sell that stock you've been holding? It's a powerful tool, but only for the next 4 years, and the clock is already ticking. So are you ready to take advantage of it?